Dumela, I'm just gonna do one of the class tests I gave my students today, and this is the class test here. All right, this is the information that you've given. Okay, and here's more. Okay, so they were asked to prepare the raw materials note as well as the direct labor cost note. Note that labor is needed, as I've said in the previous one. The manufacturing process starts with raw materials. These are direct materials used to produce a product, and those will go into work in progress. And in work in progress, that's where the actual manufacturing process takes place, where the raw materials is now converted into a finished product. And that is done by direct labor. Direct labor, it's basically people that are operating the machines that are cutting and molding the product or mixing or can be whatever. And that is the actual people that are directly involved to convert the raw material to finished goods. Okay. And then I asked them to prepare factory overhead note, which costs that are incurred to produce a product but cannot be directly traced or assigned to making the product. So this includes capital expenses, okay? And when you prepare this note, just remember one thing. You need to adjust before you allocate ABA, okay, or ABA. You need to adjust before you allocate, adjust before assign, adjust before allocate. Remember that. By adjust, I mean that you need to determine the expense that falls within the current financial year first, and then allocate. You only allocate the ones that are allocated to the factory will be the ones that come to factory overheads. Indirect material and indirect labor, they work exactly the same as direct labor and direct material. Okay, then I asked them to prepare this. And then after this, I asked them to prepare the calculation of cost of sales. You can pause and try to prepare those. And then, yeah, and then watch the video. Just press play after you have done it. Give yourself 23 minutes, okay? This must be done within 23 minutes. Actually, it must be done, yes, within 23 minutes, and it's worth 43 marks. Okay, so let me just see how I allocated the marks. I think this was 7, and this was 6, and this was 19, this was 7, and this was 4. Okay, I hope I got it right, but I don't remember. But it should add up to 43 marks. Okay, try it out. Pause and press play after you've finished, which is give yourself 23, which is after 23 minutes. Okay. So basically, this is my revision pack. It's grade 12 revision pack, and this is just a test bank. I started first because now we just revising manufacturing. So I started with this, okay. When we look at raw materials, we will start with balance of raw materials. These are raw materials not used in the previous year. Okay, here it's just me giving random examples. So don't ask me where I got the 20,000. This is just a random example, okay. And then we're gonna add purchases. When you add your purchases, it's cash plus credit, you minus returns, you minus any losses, you minus any damages, all right, and whatever you have will be what will be used to manufacture a product. And then we're going to subtract returns to the supplier. And then we've got carriage inwards. I prefer to say carriage on purchases. These are transport costs incurred to bring raw materials to the factory. Okay. Here, the example is 50,000. And then we're going to add import duties, which are tax on goods purchased from overseas. And then we will simply subtract the balance at the end of the year. These are raw materials not used in the current year. The reason why we're subtracting these is because they will not be part of the production process. We are trying to work out what actually went out of the storeroom to the manufacturing plant. Okay. So basically, I had a Nestle is opening a new factory, which is making just cappuccinos, all right? So raw materials for making cappuccinos will be what? Nuts and milk, I'm guessing. So those will be raw materials, all right? Because it's coffee, right? It's coffee as well as cremora. They're also making cremora there, which is milk. I don't know how powder milk is produced actually. Okay, but those will be raw materials for making a cappuccino. Basically, what we're working out here, these are cappuccinos, or these are raw materials. This will be milk and what did I say it was, and the nuts that were not used. Okay, so they won't go into the manufacturing plant. These are just there in the warehouse, so they should be a storeroom. The production line must be properly laid out, okay, to make sure that the production process goes smoothly. All right. And what we are calculating here, it's basically those raw materials that were taken from their warehouse to the manufacturing plant, which shouldn't be that far from if they are not in the same building or yard. Okay, they shouldn't be that far because from the warehouse where you keep your raw materials to the manufacturing process, they must be separate because temperatures might be different. Okay, but I'm not sure what's the temperature needed for milk and nuts, but once you are in the process of making the product, you need to be as quick as possible because it's easy for the product to be contaminated. If we have wrong temperatures, then the whole work in progress will have to be gotten rid of. Okay. Now, for now, we're talking about our losses. That's why I said the losses, we are going to subtract them from purchases. But to be honest, and then obviously they'll tell you where you're going to add the expense. They need to tell you where you're going to add expense. Sometimes they'll tell you that if we incurred losses, those losses will be added to factory overheads, or we can basically add it here. Okay, so you're going to subtract it. Basically, if you purchase raw materials and some of them were damaged, you're going to subtract it from raw materials, and then we're going to add it here, somewhere around here, and we're going to add it as loss due to, it's not theft in that case, to damage, or because they were, I don't know the word for it, okay, but because we can't use it anymore, probably because they were contaminated or something else, something happened. Probably milk was spilled, and so that cost will be included under direct material. But most of the time, they will include it under factory overhead as loss due to spillage or whatever. Right? But if milk was a raw material, we're going to subtract it from the purchases of raw material because we don't have it anymore. I hope that makes sense. Okay. This amount here, we're going to take it to the production cost statement. We're going to put it there as our direct material cost. So this is material that we issue to production. So this is part of production now. But we won't be able to convert raw materials on its own. What do we need? We need direct labor. And for direct labor, we're going to have these things. So for direct labor, what do we have for direct labor? We have gross salary or wage. So sometimes they'll give you the number of hours per month, and they'll give you that the rate was this much. This is the total number of hours worked by all employees. But if they said this is the total number of hours worked by one employee per month, then let's say we have 4 employees. You're going to times it by that 1,950. You're going to times it by 4, and then times it by 200, and then times it by 12. If 4 employees were involved in making a product, okay. But here it's just the total number of hours per month. Sometimes they'll say hours per year. There you won't need to multiply by this 12 here. You will not need to multiply by this 12 here, okay. And whatever you get there, it must be a gross, guys, a gross. This is before deductions. This is the cost to company. Then we're going to include things like overtime payment, which is normally the rate is double the normal rate. They will tell you how many hours, say, an employee has worked overtime, and bonuses, which is what other people call it the 13th check. 2000 want to know what the 13th check is, which is what I'm teaching the kids that I'm teaching right now. But a check was sort of a source of payment where it's just a method of payment. So previously people used to use checks. Okay, now we no longer use them unless your parents or your brother or your sister, they're into tendering business where they sell services or goods to government. I think government still uses checks, but in the corporate world, in the private sector, no one uses checks anymore. I mean, there's EFT, there's TAP, okay, there's direct deposit, transfer, EFTs. I mentioned that. Okay, so we don't use checks anymore because checks are, the admin behind checks was a bit too much. Okay. And then we're gonna add the employer's contribution. So whatever the employer contributes towards medical aid, pension, UIF, I don't know what I forgot there. Whatever the employer contributed, we're gonna add it as employer's contribution. Note that employer's contribution are extra expenses on top of paying the employee a salary. They have to top it up by paying them, by paying contributions on their behalf. So it's like this is what we call the employer's contribution plus your gross salary is what we call cost to company, which is CTC. Okay. People normally confuse deductions with contributions. Deductions are paid by the employee. They're deducted from the employee's salary. Here we want the cost to the company. So the cost to the company is what is paid to the employee before those contributions or whatever the employee is contributing to medical aid was deducted. We want the original cost. So if we pay a person 20,000, like here, let's say we pay this person 4,680,000. This must be a partner in an auditing firm that will earn that much, okay? Or head of production, if there is someone that earns that much. Probably those people that make cars or something. So if they earn that 4,680,000, and then that employee has a choice to belong to a medical aid. So if they pay 8,000 towards a medical aid, it'll be taken out of that 4,680,000, but it's not paid by the company. Yes, it's deducted by the company and paid by the company, but already it was deducted from the employee's salary. So in essence, it was not paid by the company. It was paid by the employee. It's just that the company collected it from the employee's salary and paid it over to the medical aid fund. Understand? Okay, so when we talk cost to the company, it's before those deductions. Contributions are extra amounts that we have to put in. So on top of what we pay the employee, we're gonna pay for their medical aid and pension. So this person net worth is not that 4,680,000. Cost to company will be 5 million and 8,000, I think. No, I'm lying. It's 5 million. Yeah, 5 million. I can't add that. 5,048,000, if I'm not mistaken. Yes, and 48,000. And that's how much will be cost to company for employing this person. Okay. And then obviously, actually, I was wrong there to say that is a gross salary. It should be a basic salary because gross salary includes overtime as well as bonuses, but mostly it don't include overtime. Okay, so you're gonna add all of those up, and you will get what we call the direct labor cost. So your direct labor cost will be 6,848,000, and this only relates to people's people that actually made the product. They were directly involved in making the product, converting that raw material into a finished product. Okay, and this must be added to the production cost. That is why that 6,848,000, we are going to add it to the production cost statement as direct labor. You add direct material with direct labor, they will give you prime cost, and your prime cost will be 7,033,000. Okay. Then we're going to get to what we call the factory overheads. For the factory overheads, what do we have? I will normally start with indirect material, which is normally, it works the same as your direct material. So it's opening balance plus purchases minus returns minus damage minus theft minus closing stock. So the ones used will be 950,000 for this example. Only indirect. Don't confuse direct material with indirect material. Here we're only focusing on indirect material, things like your cleaning material that we use, the others, like if you're manufacturing furniture, it'll be paint, it'll be glue, it'll be nails, it'll be plastic to cover some parts of that furniture, like on the sides or on the edges, all of those. Okay, those will be indirect material. We're going to add them to our factory overheads, but you follow the same process: opening plus purchases minus returns minus losses minus theft minus the value of your closing stock. Value of closing stock, the reason why we're minusing it is because these are indirect material that were not used in making the product. Here we only focus on indirect materials used to make the product. The ones that were not used to make the product, those are the ones we will record as inventory, or we normally refer to as consumable stores on hand. So we still have them as the asset, which is what remains of the indirect material. Then we're going to have indirect labor. This will be your factory supervisors, factory security, admin officer at the factory, cleaning lady or guy at the factory, garden lady or garden guy at the factory, the receptionist at the factory, yeah, like the receptionist at Nestle who works at the factory. They are indirectly involved in making Primora or that hot chocolate or or noodles. That's because they are receptionists at the factory. All right. So their salaries will be included here. When we talk about their salaries, what are we talking about? It's the same as direct labor. We're talking about their basic salary plus contributions by the employer plus bonuses plus overtime, etc. Okay. Now, when it comes to expenses like your rent, you need to only calculate rent expense for the current year and then allocate the one that belongs to the factory. That's why I said adjust before you assign, adjust before you allocate. Okay, for all of this, remember that. So if there was rent paid in advance, we will subtract it. If there was rent accrued, we will add it and then allocate according to the floor space in most cases. Water and electricity will be according to the percentage of usage, and sometimes it can be according to the floor space, whatever the business considers to be the appropriate cost drivers. That's what they would use to allocate these costs. All right. And remember, it must be for the current year. And then you only assign what belongs, what was used at the factory. Then we've got insurance, the same thing. It must be insurance for the factory. If you're given total insurance, make sure you adjust and then you allocate. And then we're going to have depreciation. This is only for assets that are used in the factory. You calculate depreciation for the current year, and then you allocate. And the last one will be factory overheads, which is the total. Sometimes they will tell you that, like I spoke about milk spillage, which happened for raw materials. That will be added here as a loss due to spillage or damage. So loss due to damage or loss due to theft, all of them will be included here as an expense in the factory overhead account, because it is a cost, it's an expense that the business incurred in manufacturing a product, but they are indirectly they cannot be assigned to the cost of the product. So that's why we say that indirect, we're going to add those costs here, because those are the losses. We will have to include them in the cost of the remaining stock that we are going to sell, so that we don't make a loss after all. Okay, this is what a lot of businesses like your Nestle, Tiger Brands, I know that Woolworths produces its own products. All of those, this is what they must do. And then you're going to get 2,684,700. That 2,684,700, you're going to take it to your production cost statement. You're going to write it there as factory overheads. And then you're going to add it with your prime cost to get what we call total cost of production. And then you add work in progress at the beginning of the year. And then you minus work in progress at the end of the year. That will give you the cost of your finished goods. And this cost of finished goods, which is 9,700,000, you're going to take it to your cost of sales note, where you start with the opening balance of finished goods. You add what we got from our production cost statement, which is the cost of finished goods. I normally refer to it as manufacturing cost of finished goods. And then you subtract the closing balance of finished goods, and then you will get cost of sales. That's how you get cost of sales. Sometimes they will trick you and just give you cost of sales, closing stock, and opening stock. You'll have to calculate this here. And once you get this here, you will have to take it to your production cost statement and write it there. And sometimes they won't give you the value of your closing. So you're going to take these two, subtract them in order for you to get that. So I'll try to trick you, but be smart. Always be smart. All right. I am going to stop right here. I think this will help you answer the paper that I just gave you now. And you can even try this one as well, okay, which is IEB paper 1, November 2022. This is the information. You will pause, obviously. I'm moving too fast. You just pause and read properly. Okay, pause and read properly. Pause and read properly. And then this is what you need to prepare. This is what you need to prepare. This is what you need to prepare. And then this will be the last one. It's out of 40, right? How long will that be? Let me check. It'll be 24 minutes. So we're looking at 40 marks, 20-something minutes for manufacturing. For this one, I have already recorded a video. And in the next video, check out solutions to the one that I asked you to do earlier on, which is this one here. For now, Khozo. Please don't forget to subscribe. And again, Pretoria. Thank you so much for your support. Cape Town, number 2. Soweto and Joburg, number 3. And Devon is coming through. Thank you, guys. Keep on supporting. Please don't forget to share my videos, subscribe, share them on your social networks. Let's help South Africa pass accounting. Okay? We need chartered accountants. We need a lot of chartered accountants. As a matter of fact, I speak a lot about chartered accountants. SAICA needs to pay me. Teddy and who's the guys that I know that work at SAICA. Teddy, Odwa Beng. Yeah. Yeah, those are the guys that you need to start sponsoring my channel, guys. Because I'm promoting you a lot. And Veritas College as well. Yeah, thank you for subscribing, guys. Please like, comment if you have any comments, and please share with your friends or any matriculants in the township, in private schools. Just share. Thank you so much. Let me help you pass. Khozo.